Global stocks selling off back to significant support, bond yield spiking, oil dropping, and the reason I believe Bitcoin didn't bottom, all that and more in this week's update. Let's rock and roll. Okay, Clifford, the 25-year trader, back with another Monday morning futures market open. Wow, what a week that was, huh? Everyone's saying the market crashed. I don't think the market crashed at all. What I think this is, it's called a correction. For those who are new to trading, what goes up must come down is the simplest way I can explain it. Corrections, they happen. Pullbacks, they happen. It's actually healthy. Um, what caused the correction? Kind of like a toss between this hot employment report they had Friday, which is over here. Where is it? Friday's hot report. Thursday, right here, this one. See, they were expecting 85,000 jobs, but it came in double, triple, whatever the number, 172,000. So yeah, the market freaking went kind of like had a great reason to sell off hard, and everyone's taking their profits basically. I think that's what's happening, and it's very common. Look at this. Here's 2025. You see this? Okay, this is the NASDAQ. Market rallies, pulls back. What is that? 4%? Market rallies. Here's a pullback. What is that? 5%? Market rallies again, pullback. 9%. That's an even bigger correction. So again, these are just healthy pullbacks in a significant uptrend. I don't think that the AI narrative is going to end anytime soon. Of course, I could be wrong. I don't have a crystal ball, but all I'm saying is, look, the market's already bouncing back. So what does that tell you? In my opinion, the best way you could have played this is to buy the dip. You could have bought at support. So like, let's say you knew that support was around here because you saw the market reject this level right here at about 28,913 there. You could have actually placed an order to buy right there, put a stop loss underneath this support, maybe down here at about 400 ticks below, and then you target these highs, which is like maybe 1800 if the market gets back there, right? So that's like a 3-to-1 risk ratio kind of thing there. Um, and and then in addition to that, pretty much this is a daily chart, but you could also do it on a 5-minute chart, which I'll show you later. So all right, so real quick, let's just take a look at what we have coming up this week. So here is Monday. Now again, for those who are new, Forex Factory is one of the best places you could go to see all the news releases coming up this week. Yellow is kind of like not that significant. Orange is more volatility, but the red ones, you definitely want to make sure you understand that they can be very volatile. The red is the significant impact. So as we see Monday, some numbers here from different countries. Employment changes here tomorrow at 8:15. Existing home sales, that sometimes can be a mover. Trade balance, these little ones here. But this is the big one here. Wednesday's CPI report, that's the inflation indicator. And that's at 8:30 in the morning on Wednesday. So if you have any open positions, you definitely want to either lighten up or put your stops to protect them because that could be a big mover. Canadian dollar interest rate statement, that's a big one too on Wednesday if you're trading the Forex. Monetary statement for the euro on Thursday. PPI also on Thursday at 8:30 in the morning. That's a big one. That's the producer price index. And then the rest is kind of like quieting down after that. All right, let's look at positioning real quick. So last Friday, the government released its commitment of traders report, which I watch weekly because this shows you what the smart money is doing every week. The blues are the ones we want to watch. This is actually it's called the commitment of traders. It's a government report, but the report is translated into this indicator, And for those who've been watching my channel for a while, you know that I don't use indicators, but this one I use because this isn't a market, this isn't a trading indicator. This is just a government report showing you the positioning. So that's why I use it. So here's the thing with this. See how here the E-mini S&P 500, they were short, and see how they're selling again, 114,000 contracts, 147,000, 162,000, 218,000. So this is good for the uptrend. Whenever you see them really short, that means they're either selling futures to protect their positioning, or their, hedge funds may sometimes they short futures because just in case the market were to ever fall hard, they kind of protect themselves, they hedge themselves, things like that. And then there's the speculators who are short the futures contracts as well. But basically what you want to do is look at it as a contrarian report. So if everyone's short, you want to be long, that kind of thing. So here is the NASDAQ, here is the Russell. Here's another one I've been watching. This is called the Nikkei index, which is kind of like the Japanese stock market. I watch that one as well. So yeah, pretty much, this tells me like the NASDAQ's either getting short here, Russell, they're already short, E-mini, they're short. I think it's a buy the dip, and I think the market eventually will probably retest those highs. So let's see what happens this week um, with all of that. And let's go now to the commodity sector. So oil, this dropped last week. Actually, I believe it's still bullish unless the war comes to an end, because a lot of analysts are saying the supply damage is already done. We'll just have to wait and see how that plays out. But I see on the charts a break above resistance here at 104. I see a pullback to the support level, and it held. So to me, that's bullish. But again, peace talks can change that. Not really. I mean, right now it's at 91. It's kind of in this range until we get a break above this level right here, 96.82. Then we'll probably test those highs. But if it just stays in the range, we'll just have to wait and see what happens with that political situation. But I don't think the stock market really cares anymore. It seems like I was checking the other day, even when oil was rising here from like $79 to $100, the stock market still went up. So, you know, that it's kind of like it doesn't even, it seems like the stock market seems to just be a bullish momentum no matter what. Um, so I guess it's priced in. All right, over to the metal side, we have gold. And as you see, they're long gold at about 182,000 contracts here. Not much going on there. Silver, the dollar. You definitely want to watch the dollar if you're a Forex trader. If you're not watching the US dollar, you're basically trading blind, because the US dollar is basically the biggest influence in the Forex. If the dollar's up, then all the other currencies are usually going to be weakening, And as we see, the dollar just broke above resistance here with that unemployment report. So it looks like, let's see, I see a close above resistance here on the dollar. I think a dollar is going to be I think they're going to buy the dollar if it dips again. So we'll have to see how that plays out, which means if they're going to buy the dollar, then that's the translation short the euro pretty much, because, and as you see, it's already been weakening. But let's see how the currency side looks real quick for the COT report. Here is the euro. So they're kind of slightly long here. The pound, still really short the pound, although they're not this short. See how short they were here? 94,000 contracts short the pound. And look, the market catapulted. When they get overcrowded short, that's when you want to be a buyer. Once you get some kind of indication that the market wants to move higher, we'll talk about those options later. But here, sees Canadian dollar is another one. They're short 92,000 contracts, but look here, they were short 157,000 contracts. So again, if everyone's short, who else is left to short? Who else is left to sell to? You know what I mean? All right, here we go. Aussie, Swiss. And I've been watching this one. I mentioned this one last week, the yen. And look at this. Not only were they short the yen last week, but they increased shorts again. Now they're 128,000 contracts short the yen, which means that they are so oversold the yen now that they're almost at the level here, 2023. See how short they were the yen? And look what happened. The freaking thing catapulted. Look at that move. That is a freaking huge move, man. You're talking like 600 pips maybe in a week. Is that? That's a big move. That's how you catch the big moves, guys. The way you catch the big moves is you find out when the institutions are going to close positions because they're not like us. See, they can't just buy and sell like on a dime like that. They gotta like close monster amounts of positions, so that's why the move is so powerful. Um, but anyways, so yeah, I'm still long the yen. If you're gonna play the yen on this COT report, what you could do is you could short the dollar yen if you're in the Forex. Um, and another thing about the yen, you see this move right here? I forgot about this. This is when they tested the Bank of Japan. They tested them by saying that they're going to continue to weaken the currency. And look how the Bank of Japan responded. Boom, drops 400 pips in one day. Why? Because the Bank of Japan caused an intervention in the market with the yen. And they basically, I don't know what they said exactly, but supposedly, like, they're not going to let the currency weaken anymore. Something to do with their, I forgot exactly um, something about they might raise interest rates in the future or something like that. But even if you don't know everything there is to know about the Bank of Japan, the bottom line is you see how short they are. I mean, at one point a bank is, how weak is a country going to let their currency get? You know what I mean? So, and now they're testing them again. Look at that. They were here. Bank of Japan stepped in, smacked the market. Now they're testing them again. Like, okay, Bank of Japan, let's see what you got. We're playing a game of chicken here, right? Like, let's see what the Bank of Japan's going to do. I'm going to continue to weaken the currency until and test out how test out the poker face of the Bank of Japan, right? So let's see how they respond. This should be interesting. All right, what else we got? Oh, one last thing. Bitcoin. Everyone was saying to buy Bitcoin, right? That it had bottomed. But look at this. And we'll end the video with this one here. Um, everyone was saying that right here, Bitcoin had formed the bottom, right? And it looked like it did because, you see like a 1, 2, 3 bottom, buy above resistance kind of thing, right? But look at this. And this is why the COT is the most powerful edge you will ever have in trading. The market throughout history has not been able to rally when the institutions were too long. You see these rallies in Bitcoin? Look how short the institutions were. Then the market rallied. Look how short they are. The market rallies. Look how short they are. Bitcoin rallies. Look how long they are now. So if you're buying Bitcoin and you're not paying attention to the COT report, you're kind of trading blind because look, all the institutions are buying Bitcoin. But again, if everyone's buying and they're overcrowded long, who else is left to buy? No one. So what do? They start closing positions. So let's see if this Friday's report, you see a big drop. See how long they are here? 2,487 contracts. I wouldn't be surprised if this Friday's report shows a drop down here, maybe to like, I don't know, I'm guessing 1,500 long or something like that. And look, the market already catapulted. So as you can see, I'm not saying that the report's a crystal ball. You're going to have losses. Nothing's a crystal ball in trading, but it kind of gives you that edge, kind of like poker players have an edge. They know when to kind of go, try and play a hand, whatever. This is like this is like right here your full house. You're holding these cards and it helps you because you get on the right side of the market. So, all right. So in summary, this week I'm going to be watching that CPI report on Wednesday. And again, I think it's a buy the dip in these indexes. So I might go long. I might look for long opportunities. In the future, I was thinking about doing setting up some live streams. I'm still learning how to do that. I'm new to live streaming, so I haven't learned how to do that yet. But once I do, I'll do some live streams so we can, all watch the market together during the live sessions and everything. But for now, while I get that going for this week, I mean, here you go. So buy at support, sell at resistance. I mean, yeah, I think this thing is a buy on dips. So I mean, if I drop down to a 5-minute chart and I look at where support is, right? And I want to go conservative, let's say, you know, here's support, right? Why is this support? Because market hit it, but then it backed away. So this level right here, 28,913, looks like a strong level to me. If the market comes back to retest that level, I would definitely say that's a buy the dip on the NASDAQ. What level did I say that was? 28,925, right? 28,925, which is, where is that? It's up 385 point, 28,935. Yeah, see, it's towards the bottom down here. But you don't have to wait till it gets to the bottom. One thing you could do is you could just look for support levels on the chart, like here. You don't need indicators. Like I see this as a pretty strong level because look, the market already closed above that level hard. So if the market comes back to test this level, you could buy the dip right here, maybe put a stop like, 40 points below, and then target some of these highs. And on the NASDAQ, if you're trading the micros, you could risk maybe like, what is that? $2 times well, that's about, if you have like a prop firm account, you could do that's like $80 right there. But if you're doing more contracts, $2 times 40, that's what? That's like 80, right? But let's say you increased it more, you bought like 5 of those, maybe like $400 risk, right? To make 200 here, 300. What is that like? Isn't that like 400? Oh no, I'm sorry. I did that wrong. 40 points in the NASDAQ. Let's say you bought 5 micros, right? That'd be like $400 risk. But look, you're risking 400 to make freaking, what is that, 2600? Or yeah, because it's $10 a tick if you buy four. For those who are new to futures, I'll make some more videos about that in the future. But this is great for a prop firm because, like, let's say you have 100 grand in the prop firm, right? And they're giving you a $3,000 drawdown, something like that. You could risk like 30 points, maybe 30 or 40 points, and catch a nice move on the NASDAQ. You don't even have to be looking at the market. You could put an entry order right here at like 40 points, risk 400 bucks, and then close it at 1,000. That's like what? Or close it at 1,200 maybe. That's like 2, 3 to 1. You're probably going to pass the challenge very quickly by doing that. But I'm going to make a whole series about prop firms in the future. But I jumped ahead a little bit, but I just wanted to let you guys know that I think it's a great way to buy the dip. But again, always use risk management, because we never know when the market's going to move against us. You always want to have your stop in there too. And I like to place my stop real quick before I end the video here. I like to place my stop under a support level. So that way the market doesn't have a chance of hopefully not stopping me out. So like if I buy here, I gotta get my stop under this level here. Why? Because the odds of me getting stopped out here are low, because look how much buying pressure is here. But again, you have to make sure that when you're trading with support and resistance, you find the significant highs and significant lows for that. I'll make another video about that in the future, how you guys can definitely do that. But you definitely want to look for like 2, 3 to 1, 4 to 1. That way, if you're wrong, you could be wrong more than 50% of the time and still make money with those prop firms. I'll make a whole series about that in the future. But again, in summary this week, I think buy the dip in these indexes. I also think go One last thing here. Yeah, buy the dip in the index, and also possibly buy the dip in the metals. They look like they're holding these support levels too. So like if I drop down to a 5-minute chart, you know, see here's it here again. Here's a break above resistance. I could buy these dip in these metals right here. I could place an order right here, right? Maybe risk like, what is that, 40 cents on the micro silver. Again, that's like 400 bucks. And I make 1500. Risk 400, make 1500 if the trade is good, right? But again, you could do this in a prop firm account, so that way you don't have to use your private capital. But those are the kind of trades you want to look for, you know, 4-to-1, 3-to-1, 2-to-1 at least. That way you don't have to be right as much. So again, summary, I think metals are a buy on the dip this week, along with the S&P 500 and the NASDAQ. And that's about it for the video. If you guys enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing all of you guys in the next one. And never risk more than 1 to 2% on your account on any given trade, and always expect the unexpected each and every time you enter the market. Have a great trading week.